Today on the Clean Power Hour, O&M and asset management for large-scale solar. I'm Tim Montague, your host. Check out all of our content at thecleanpowerhour.com, cleanpowerhour.com. Please give us a rating and a review on Apple and Spotify. That is how others will find this content. We are actively looking for corporate sponsors, so please reach out to me, cleanpowerhour@gmail.com, about becoming a corporate partner of us and helping us speed the energy transition. With that, I want to introduce my guest, Michael Eyman, who is the managing director of Origis Services based in Austin, Texas. Welcome to the show.
Thanks, Tim. Happy to be here.
This is a long time in the coming. I appreciate your patience with me. And it is so heady days. Here we are recording in August of 2022. The IRA, or Inflation Reduction Act, has just been signed into law this week.
Yes.
And what was a solar coaster and a boom and a bust is now a rocket ship. The clean energy industries are growing by leaps and bounds and will continue to take off and just explode. So it's really heady days in clean tech and clean energy. But give our listeners a little background on yourself. How did you get into energy, and how did you come to Origis Services?
Sure. Yeah. So, I joined energy in 2012. So I've been in it about 10 years. My previous career, I was 21 years in the U.S. Navy. And I was a pilot and retired from that, and was really looking to continue to serve in some way. Plenty of my friends, fly for the airlines. Those are certainly honorable, careers and career paths. But for me, I really wanted to do something that was going to have an impact long term to the quality of life and who we are as Americans. And having spent a lot of years over in the Middle East and in parts of the world in conflicts and wars, and seeing what that's all about, I wanted to do something that could free up our foreign policy to avoid other people having to go do those things that I had to go do and my friends had to go do, and which, and the lives lost on both sides, right? And so renewable power was where I sort of ended up. I spent some time really looking at it and trying to decide, where can I be of service and where can I have an impact? And I looked at the power industry, then I kind of ended up in renewables, and I looked at solar and started looking at companies, eventually found my way to SunPower. And Marty Neese, who was the COO at SunPower at the time and was a former military Army officer, managed to network out to Marty, and Marty gave me a shot when nobody else would. So I came in as a junior manager, in 2012, well below, where I was positionally in the military, but just determined to plant my feet, pivot in a new direction, and work, put my head down and work, and earn my way into a position where I could have an impact. And left SunPower after about 5 years, spent about a year and a half at MaxGen, which was growing at the time and riding the solar coaster themselves, and left there in March of 2018. And then was lucky enough, started Renew, as right about that same period. And then in September of 2018, was lucky enough to sign on with Origis Energy, which at the time had an investment with Global Atlantic, which later became KKR, and was really going to be scaling and needed, somebody who could create a services organization to do O&M and asset management. Not that many of us in the country. I had sort of navigated into that spot. I had, 20 years of operations experience. And so this was a natural fit. And we've now grown this organization to a separate entity, a separate brand, Origis Services, as a subsidiary of Origis Energy. And we're managing right about 2 gigawatts of utility scale with a little bit of DG on top, all across the country today for both asset management and O&M services. So that was the long answer to both your questions connected. So that's how I got into renewables, and that's how I ended up at Origis.
you touched on something there that I want to drill down a little bit on. It's related to growing the industry and how companies are hiring. There's a habit that hiring managers have of only considering candidates who have relevant experience in the same industry that they're recruiting for.
Yeah.
And I think this is a tragic mistake. I functioned as a corporate recruiter for 5 years. I know the recruiting industry very well, both on temporary and permanent staffing in technology. I worked in Silicon Valley during the first internet boom in the late 90s. And, you know, if you work in clean energy, you most likely come from some other industry.
Yeah.
That's the bottom line. And we're still a very young industry, even though the technology is 70 years old. And of course, the industry is maturing. We now have a terawatt of installed solar globally. That was announced in March of this year of 2022. And, but we're just getting started. We have a long way to go. And there's just no way. It is physically impossible, right, for us to staff this high growth industry, including solar storage and wind energy, of course, with professionals who have worked in clean energy. It is not possible. And so you hiring managers who are listening to this, you have to open your minds and figure out ways to identify people who have potential to grow into and learn this stuff. And it's not rocket science. It is, some of it is highly technical. Of course, if you're an engineer designing, solar arrays, there's a technical aspect that you have to have experience as an electrical engineer. But for the most part, we in the energy industry can learn on the job and through continuing education. I'm a big proponent of NABCEP education. I'm a NABCEP PV technical sales certified professional myself. But I'm curious what your thoughts are. It sounds like you went through that a little bit on the front end, and obviously have now built a resume with some stellar companies like SunPower and MaxGen. They're now the solar panel manufacturer for what was SunPower, right?
Well, no, that's Maxion. MaxGen is the operations company owned by Oaktree, which is now Pierce Renewables.
Okay, good.
And people get that Maxion and MaxGen are super close.
Thank
That happens
you.
all the time.
Gotcha.
Yeah.
But so, and Origis Services is, you are faced with the brunt of the labor shortage that we are living in now. Unemployment in the U.S. is around 4%, maybe a little less. And so workers can be picky and choosy about where they go. What are your global thoughts about recruiting and staffing, and how do we be more successful and more smart or intelligent about getting more people involved in clean energy and clean tech?
Yeah, I think, the basic premise, I think, of the question that you asked, which is the industry is growing so fast that providing only experienced people internal within the industry in an industry that has not matured so that it can meet those demands is an impossible ask. I think that is a fact. So, the question is then how do companies deal with that? And you're right, I dealt with it on the front end. When I was transitioning out of the military, I tried for 2 years to find solid employment. It wasn't until I went back for an MBA and managed to network in to a senior executive. It was a very deliberate plan, that I had to execute to get there, because prior to that point, my resume bounced off companies like a Super Bowl, right? Because they would just look at it and go, no solar experience, no certifications. And the fact that I had I had master's degrees and I had all this other experience, which was more on the soft skill side, which in my view is typically the harder things to actually do. Certifications are easier to sort of quantify and understand than the soft skill side. It just, there weren't processes and there wasn't a way, to get into an industry from the outside at the time. And that's a huge mistake, because not only is it absolutely impossible for us to meet our growth needs with only solar people, it also presumes that we have no lessons in this industry to learn from adjacent industries, that we have nothing to learn from oil and gas. We have nothing to learn from other sources of power. We have nothing to learn from wind, who's 10 years ahead of us. We have nothing to learn from nuke operations or combined cycle gas or financing structures in other industries. And I think that sort of, intellectual ego is false. It's just wrong. When we bring in people from adjacent industries, we get the benefit of those industries' maturity. And yes, there are some jobs in solar. If you're a panel chemistry or technology scientist or power electronics engineer, those are specific deep skill sets that, of course, you need that deep skill in those areas to really function well. But if you're a power electronics, engineer, inverters are applied in other industries. They're not just here, right? Working with the grid and understanding how to deliver power is not unique to solar. So I think it's really important for us to sort of, I think the solar industry fought really long and hard for a seat at the table. And we're here now. It's a major source of power. It's going to be growing. I think Woodmac said 85% increase in utility scale solar out of the IRA. But that means that the biggest problem that Origis Services, and frankly, the services part of the industry, which supports the 30-year life, 30, 40-year life of these plants, the biggest problem I have is labor. And that problem just doubled in size almost, right, with the IRA, with that growth.
Yeah.
And so that means we have to focus on training. We've got to focus on, building people from the ground up, but we also have to recognize expertise and knowledge in adjacent industries and welcome it into our own with an open mind to the lessons that come with those people and to adopt those best practices. And so I think that's how I approach it. So for our hiring managers, or when I'm directly involved in hiring, I try to move away from we need X number of years of solar experience. And I typically ask the question, is that experience really needed in that specific role, truthfully? Or is it simply that we need experience in that area, and that can come from other industries, other places, and we need to value that. And typically we've had great experience bringing in people from adjacent industries. They come in hungry, they come in wanting to do something different. They appreciate the opportunity to pivot and grow in a new direction, and they turn into great employees.
Give us a flavor, I guess, of the types of employees, the types of job opportunities that you see on the horizon at Origis in the next, 3 to 5 years. What is it that keeps you up at night about this growth opportunity that we're now presented with? It is both a challenge and an opportunity. But how do you guys see the coming wave?
Yeah. Naturally, the field personnel, from the services perspective, again, we focus on, at Origis Services, we focus on the 30, 40-year life, right, of these projects. So the portfolios are accretive by nature, as opposed to EPC or finance, which is turning over projects, getting them live, releasing them, and then taking new ones. So those are throughput kinds of businesses where you can build a sort of mass that, within a company, and then that mass can sustain throughput at some level. Services businesses or portfolios, if you're an owner, are accretive in nature, which means the size of those just gets bigger and bigger and bigger over time. You don't get to reuse your talent. Once you assign talent to an asset, to a site, that talent is tied to that site, because that site is going to need those 3, 6, 10, whatever technicians for its lifetime. Now you can train them and move them up, and you can give them opportunities to move out to new locations, but that site's needs don't change. You cannot reuse those to do more, right? Those positions can only be where they are. So that means when you increase at 85, or when you have a compound annual growth rate of 30% in an industry, that means every 3+ years you're doubling the size of the industry.
Yep.
That is having a multiplicative effect on the back end. And so what we're doing is focusing on creating long-term careers, bringing people in as at the very lowest levels, providing them with training, providing them with good benefits, providing them with next opportunities and next jobs so that they can have access to the American dream, right? They can pay a mortgage, they can put their kids through college if they want, they can afford a home, they can afford to put money away and retire and build that next generation, right? That's what we're focused on. And I think in the past, technicians were sort of viewed as, oh, you can hire them and fire them and they come in and come out. And that's wrong. That is absolutely wrong, right? What we do is based on their knowledge, their work, their sweat in a very, real way. And so we have to respect that and we have to act accordingly. And so the whole industry needs to get to where we have some standardized training so that owners, regardless of, who's whatever's on somebody's shirt, can expect the same outcome, same quality of service. Those are things that we need to mature and do. We need to have the same standards of practices around the different parts of the scope. So these are all things that we need to work on and normalize. And these are all things that keep me up at night. But the number one, for sure, without question, is finding people.
Yeah. I love what you said about, building careers and investing in employees. Employees are not commodities.
No.
And if you treat them as such, they will be a commodity and they will come and go. And turnover is hugely costly to large companies and small. The reality is that onboarding new employees is very, very expensive. And then retaining them, it has such a cumulative advantage to the employer if you can retain them, because that knowledge leaves with them when if they are not happy and they end up leaving. That is a huge loss. And so I'm very fond of that long-term approach. And I'm curious though, obviously, let's say we're talking about a technician, somebody who has a basic competency in mechanical skills. They know how to use basic tools. They can turn a wrench and a screwdriver and they can follow instructions. And we are on the cusp of some major, innovations in terms of how technology can benefit field technician work in the way, for example, augmented reality. The day is not far away where you will have, a VR headset on or some other similar device. And when you open up that inverter box, there will be some, AI guidance.
Virtual overlay. Right?
Yeah, exactly. Yeah. A virtual overlay of touch this, but don't touch this, and turn this, do not turn that, which will, of course, make our workers that much more productive and ease their path from being less experienced to being more experienced. But how do you see the landscape just in terms of getting people in and then functional? Tell us a little bit about that onboarding process and training, and what can people expect, I guess, from a good employer like Origis Services?
Yeah, I think, we really take the first 6 months of a new, level one sort of employee as the opportunity to get to know them. We train them in CPR and OSHA 10 and NFPA 70E. We train them on our processes and expectations, the scope on the site and what the site needs from a maintenance perspective. But somebody who's really a fully qualified and deeply knowledgeable technician, it takes years, right? So it's really about taking that first 6 months, and then when they become a level 2 technician and they're really able to start operating on that plant somewhat independently, and we typically view that at about 6 months, they still have a lot to learn. So this is not you train them and then they just go, right? Because particularly if people are migrating across different sites, and you see this commonly in the DG side more than utility side, but nonetheless, inverters have different architectures. They have different requirements. They have different safety requirements. They have maintenance requirements. Trackers have different maintenance requirements, different panels, whether it's CDTE, thin film gas deposition technologies versus, full copper back sheets on the Maxion panels versus, poly versus mono versus bifacial versus monofacial. Those all have different operating characteristics, different maintenance requirements, and different failure modes. And so, and that's ad infinitum, right? It's not just the stuff on the site, it's also the stuff you need to maintain the site. If you have a tractor on a site, that's part of your maintenance, you also have to maintain that tractor, right? So all of that stuff comes into play, and it really takes years. In my view, typically about 3 to 5 for somebody to really become a fully qualified tech level 3, tech level 4, really have a breadth of experience to bring to bear. And so it's not just about training them on the front end. It's about providing a career path with different levels, with different certifications and qualifications and training paradigms and benchmarks that they have to hit along the way to grow them. And that's not just technical. It's also training somebody as a manager. If they're going to be a lead and they're going to manage a site, well, now they have to start worrying about FLSA guidelines, right? About when they can, what is overtime? What are the holiday hours? What does that mean? What can you say and not say? What are your rights relative to hiring and firing under federal guidelines, and what things do you have to consider? There's a lot there that's not just about turning wrenches and testing circuits, because you're building people that run facilities often in remote areas without a lot of oversight and guidance. So they have to function in an independent way. It's one of the reasons why we really like military people. I'll admit to a bit of a bias, having come from there myself, but military people are sort of trained to operate, alone and unafraid in these sort of forward environments, and to make decisions within the context of broader guidance. And that's really what we need to operate these plants effectively and safely all around the country.
Hey, everybody. Thanks for listening to the Clean Power Hour or viewing it on YouTube. We do have a great YouTube channel. If you're not subscribed, please go to cleanpower.group and hit that YouTube icon and subscribe to our channel. Of course, you can find all of our content on your favorite audio platform as well. So please give us a rating and review. Back to the show. So let's talk about your business at large. Large scale solar is happening in perhaps a dozen states now, at least in the United States. And
I'd say most of them these days, really, but yeah.
And it's a very fast growing, changing landscape. The technology is changing constantly, of course. Trackers have swept the field now in certainly the the central and lower latitudes of the U.S. It's different if you go to Canada or
Sure,
or far northern Great Lakes region, for example. But tell us a little bit about that, and who are your key customers?
we really look, being an owner ourselves, Origis Energy, parent company, being an owner ourselves, we sort of understand what developers and owners go through to put these things in place and what risks they're taking as owners. So we really look for customers that have similar profiles, simply because we understand what they're dealing with. We sympathize, empathize, and have developed processes, procedures, and documentation to that end for ourselves, and then extend that to others. So we really look to work with deep long relationships with developers and owners who have a pipeline of business and will constantly be bringing new stuff in, but with whom we can sort of standardize how we operate and make sure that we can provide a quality product over time. That sort of transactional viewpoint of like going after RFPs and sort of recycling every couple of years and recompeting. If there's customers that want to do that, they want to recompete their stuff every year or two, we will respectfully pass, because that's not good for the sites. It's not good for the production. It's not good for the employees. And so we don't want to take part in processes that undermine the viability of those employees in those facilities, and sort of recognize that we're not going to do a good job in that paradigm, and really don't think anyone can, truthfully. So we look for long-term, deeper relationships with recurring business where we can invest in those relationships with some certainty, and they can invest in us, because we feel like that's sort of, that's a balanced relationship that works for all parties.
And how much of your business approximately is Origis Energy versus other asset owners and developers?
Yeah, it's interesting. We created this company in January of 2019, as I recall. And the intent was, 50-60% was going to be internal pipeline and 40 to 50% would be third party. As it has developed and as assets have been sold and as companies and acquisitions have occurred, we're now like more than 90% third party. So we have our own pipeline that's coming our way. But today, of the 2 plus or minus gigawatts we manage, less than 100 megawatts is our own stuff. And so that's interesting. That wasn't intended. It just sort of happened that way. But our model is to use Origis's pipeline as both a developer and an owner to stabilize the business and to build the infrastructure to support, and then to offer that out to the market as well. And so the plan was for it to be half, but it's more than that right now, and it may be less than that at some point in the future. But that's sort of the goal.
Yeah. And dealing with the built environment, you see a full spectrum of good, bad, ugly, quality in terms of the actual construction, the materials used, the practices used. And so you're inheriting, on the one side, you're inheriting a fairly consistent product, probably, if it's self-developed, but you're dealing with a huge spectrum of types of construction. What do you say about that? What do you see? And what is your sage advice to developers and EPCs about this? I came from the EPC side of the industry. I worked for a large solar installer, and there's a lot of downward pressure on pricing.
Yeah.
And that means lower quality parts and labor. And we of course, had our threshold, and we were a high quality service provider, but we struggled to be competitive. And so there's a broad spectrum. And so I'm just curious, what are you seeing? Are there trends, and is there data that things are basically okay, or that the industry needs to sit up and listen?
Yeah, I would say, there was an immense amount of cost down pressure on the industry, as you know, because the goal was to become competitive with, the traditional forms of power in all 50 states and every country in the globe. That was sort of the goal. Like, how do we stop becoming, an environmental use case that is a luxury to have, and instead just become, green electrons that compete on a cost basis with everything else out there in the market. I would say that the industry has done a great job of achieving that goal. Today solar is the fastest to be deployed, lowest cost of power. I think that of traditional power, the next one up is like combined cycle gas, I think, which hits a price point still above. And so we've achieved that goal, but in achieving that goal, it was cheap at the cost of everything else, at the cost of failure of companies, at the cost of creating this up and down roller coaster in the industry, and at the cost of the life cycle value of these projects. So and that played out in a number of ways. I would say I've had EPCs tell me, well, we only, we bought these projects. We bought these parts and they were good for 2 years. And that's as far as our warranty goes. So we don't care beyond that. That was a moment of honesty from them, but not a good stance to take. I have inverter companies who churn their products and get rid of their supply chain and their pipeline of parts, so that you can't maintain their stuff over time, that breaks constantly and constitutes 70, 80, 90% of the failures on these sites, and have no response time guarantees, have no obligations against the power that's lost, and take zero accountability for how it affects that. And on the other side, you've got off-takers and PPA holders who don't take risk on weather. They don't take risk on those production issues. And in between are caught the owners and the operators, trying to make the most out of what are very compromised decisions that were made upstream with very different goals in mind. So as an industry, we've got to get to a point where we all have the same goal, which is to deliver reliable power for 30 or 40 years at a time. And we've got to make quality decisions. That has not helped, frankly. I mean, I think the ITC and the PTC and what's happening with the IRA is great. It grows the industry, but it also skews decision making, in ways that are not always productive. There's an old saying, in every blessing has a curse, right? Massive growth shares the curse of having to find labor that's not available, right? Stimulation creates the curse of people being focused on the financial gain of the stimulus and not on the quality of the output of the product.
Yeah.
At the same time, that cost down has given people the bias of expecting that that's going to continue to be the case. It's hit the bottom. Prices are on the rise. There's inflation. There's the need to train and really build quality people. There's the need to invest in quality on these sites. And so the assumption by financiers that things are going to always be cheaper, or that the terms that they received in the past, which were patently unfair to the operators and other folks, are going to continue. And that's just not going to be the case. And so, we're going to have to deal with these realities in order to mature as an industry. But, I point people to, we've done a number of these where we've talked about production. Look at kilowatt hour. Linux does a pretty good report every year. That 21 was the first one, 22 this year, that shows the modeled production on these plants across the country is not what they're getting. It's as much as 4 to 6% or more in the Southeast off, which can be a large percentage of, like, when you've got debt and you've got the other stuff, that can be a large percentage of the actual revenues that are available on the backside, right? To keep these plants running. And so we have got to get realistic about the cost, and we've got to get realistic about how these plants are going to produce. Because when you've got a PTC that's paying you for production, going back to the IRA, and you're lying to yourself about what that production is, you're creating a larger an even larger gap on the back end that's going to have to be addressed. And operators cannot make a plant do more than it's physically capable of as it's built at a location. It doesn't matter what the model said that pre-existed the physical reality. The physical reality is going to define what it's capable of doing. And you can't make the physical reality match a fictional model. You have to go the other way. And yet everybody finances the fictional model. So that's where the pressure is, to meet some fictional model. But if that fictional model doesn't match up with the reality, you're never going to get there. And there's no amount of technicians or work that we can do that's going to change that.
Yeah, I keep my finger on the pulse of what's going on in solar construction here in the Midwest, and um, you know, there's some very tenuous relationships between developers and installers, because the developers force the installers to agree on a low price, and then the installers get burned and are not making enough profit to continue that practice, right? And so the list just gets shorter and shorter, or it's an escalator. There's just a constant churn in what developers they will consider working with, and this, you can go up or down either way in the food chain, and you'll find this phenomenon. So we have to be more realistic. We have to be more conservative and focus on quality. And meanwhile, we're also seeing this massive now growth of onshoring of manufacturing. Some of it will be established companies growing, bringing their practices like Q cells. John and I, my co-host, were talking about Q cells this morning, and how they're looking at I think a 9 gigawatt plant in probably somewhere in the South, in South Carolina, Texas, or Georgia. They already have a plant in Georgia, and yeah, it's a South Korean company, but we're going to benefit by that, by them bringing this established high quality production know-how to North America, and that's going to benefit us in so many ways.
Yeah.
I'm always shocked to hear about all the problems that can occur in the field. There's problems with shorting and inverters failing and modules failing, and it all accumulates to somebody's going to have a bad taste in their mouth, and there's lots of pinch points. Developers are often providing a production guarantee to somebody, and so when that solar farm goes down for whatever reason, somebody's losing money, and whether that's the factory that it's serving directly, or the financier, the owner and operator, and so we just have to be more conscientious. It is kind of a dark or a shadow, a dark side or a shadow of capitalism. We are compelled to try to drive towards higher and higher profits, and I just think that there's enough to go around, and we need to just be very careful. We don't want to get black eyes. You see this in the battery industry, right? There's been so many fires and thermal runaway problems, both in mobile and stationary storage now. It boggles the mind. And now fire departments and authorities having jurisdiction are pushing back in a big way on permitting these projects. And that is just not good for the clean energy transition, because storage is so beneficial to the grid. So it really has repercussions. So in our last few minutes together, Michael, what do you think the industry at large should really shine a light on? Where do you see an opportunity, both for Origis and for other companies in solar and storage, to up their game?
Yeah, look, EPCs need to focus on quality. They need to put enough people in the field that they can actually do effective QA/QC during construction, so that they know that things are being done in a quality way. That's one of the first places you squeeze when you don't have enough money to contract, is on the supervision, right? The overhead costs. And they need to pick quality materials that are going to last. That's true of developers. But I largely see these problems as downstream effects of a couple of upstream events. The economics of a site of a deal are defined at the PPA negotiation table, right? Utilities and off-takers, this idea of lowest cost RFPs and just getting the cheapest PPA means that if you don't bid competitively, you don't get the business, you don't build it, you don't give the business to the EPC, you don't buy inverters, you don't operate the plant. It just never happens, right? So there's an immense amount of pressure at that table to go after numbers, which then sets up everything we just talked about. So there has to be a reckoning at the PPA and at the off-taker negotiation table, right? The industry has got to represent real differences, and the off-takers and the utilities that are contracting for those PPAs and for those off-take agreements, whether virtual PPAs or whatever, have got to recognize that they get what they pay for and discriminate between, how many times have you or I heard a story of a PPA at some crazy low rate that somebody bid, then it was sold to someone else, and the project just never happened because it was never possible to execute at that rate. Well, how did that benefit the utility to go through all that to build something that never occurred, or that if it did occur, didn't deliver the power that they needed? But everyone's so short-sighted. They're just trying to win at the deal table. And what we should be looking at is winning over the life of these projects, right? So that's the first thing. I'm going to shine a light on it. You got to go all the way up to the source of that stress and that pressure. And that's where it starts. Secondly, I will say so many of these decisions are driven by the finance industry on both sides, right? You have these funds which have money sitting on the sidelines that need to deliver investment returns, and so they've got to put that money to work. You've got developers, you got financiers and tax equity, all trying to show that these things are super profitable, and so they convince themselves of numbers that are not real, or even better, they set the numbers early and then go and try to make a reality meet a number that was based on a financial target and never based on the actual costs and reality of what it is, and that results in a lot of compromises. And so we've got to get honest about these things. We've got to be more responsible as an industry, because if we say we can stand toe-to-toe with nuclear, if we say we can stand toe-to-toe with gas and coal and oil-fired plants and other forms of power, you have to actually deliver that power in a reliable way, or you are not standing toe-to-toe with them at all. And so, and that is something that we have to deal with. So if we want to continue to be, okay, we'll take some of that renewable stuff too, then fine, continue to behave like this. If you want to be the way the world is powered, then you have to act in a responsible way to be able to deliver on that promise.
I mean, I love your perspective. I think there is a pretty fundamental flaw in our system right now, in our economic system, that drives the demand for short-term profit and not the long-term viability of our industry per se. But I would love to continue this conversation, but we're out of time. How can our listeners reach you, Michael, and learn more about Origis Services?
Sure. Yeah. I mean, we have a phone in the Rock 24/7, 365. Please don't call them. They're operating plants all over the country. Do go to origisenergy.com or origisservices.com. Reach out to me on LinkedIn. You can michael.eyman@origisservices.com. If you have questions, if I can't answer it, I'll make sure it gets to the right person. Origisservices.com has lots of resources for people to look at. It'll have a link to this podcast, when this goes out, and anybody that reaches out to us there, and there's a section there where you can go to ask questions, and our marketing and biz dev folks will then connect to that as well. So, any one of those ways to outreach to us. Also, we're at a lot of the shows. We'll be at RE Plus. We go to a lot of the SAMNA conferences. They put on great conferences, and so, you can also look and schedule time with us at any one of those events.
Yeah, I'm glad you mentioned RE Plus. This episode will hopefully drop before we go to RE Plus, but September 19th to 22nd in Anaheim, the largest solar and storage conference in the United States. Check it out. Check out all of our content at cleanpowerhour.com. Please give us a rating and a review on Apple and Spotify. That will help others find this content. That's the bottom line. We're here to grow the energy transition and bring others along with us from other energy industries, but other industries writ large. This is a tremendous economic opportunity, and we need to grow this this amazing rocket ship that we are riding. So with that, I want to thank Michael Eyman, Managing Director of Origis Services, for coming on the show. I'm Tim Montague. Let's grow solar and storage. Take care, Michael.
Take care, Tim.